May profits be upon you. Welcome to another weekly Forex forecast. We're going to go over the US dollar index, the euro futures, pound futures, Aussie dollar futures, New Zealand dollar futures, Canadian dollar futures, Swiss franc futures, and Japanese yen futures. Yes, we're going over all of them. Now, remember, when you trade on the spot, when you trade the euro, the pound, and, and others against when you trade it on the spot, you're trading against the US dollar. So you're looking at pound USD in essence. You're looking at Aussie US dollar. You're looking at Euro US dollar. You're looking at New Zealand dollar US dollar. Okay. But uh, think just the opposite when it comes to the Canadian dollar, the Swiss franc, and the Japanese yen, because you're not looking at US dollar, Japanese yen. You're looking at Japanese yen against the US dollar. You're looking at the Swiss franc against the U.S. dollar. You're looking at the Swiss. I mean the what did I say? The Canadian dollar against the U.S. dollar, CAD, USD. You understand? You got to think just the opposite. Now let's look at the calendar ahead. Nothing happening. No red folders on Monday. Monday, that's a funky day. Watch yourselves, because if there's no liquidity injections in the markets in the form of news, it's hard to gauge where the market might be going. All right, so a lot of people take these days off. I don't like to trade on those days, but I tend to watch the markets every day. So I just watch. I like to observe. All right, so Tuesday, Wednesday, Thursday, all of these are good days. Look at all the red folders. All of them are good liquidity injections, right? Jolts and the Governor Bailey speaking, the Fed chair, Mr. Powell speaking. All right, but ADP on Wednesday. All right, but what we want to watch is non-farm payroll. We want to watch the employment change in the non-farm employment area. So that is a big one. NFP is a big one. Has the potential to reverse markets. That's the one you want to be careful of. All right, like CPI, like um, what do you call it? Interest rate decisions. Those are the ones that are high impact, and you want to be careful when you trade those. I like to trade after the news on those high impact ones, news events, because you could fade the move afterwards. It's easier to trade. Okay, if we look at the U.S. dollar index, we're looking at the monthly time frame. Why do I have a channel up here? Because it seems to be holding to an obvious channel. All right. And when price gets to the support side or the resistance side, it tends to have a reaction. I mean, it's just this is not. I'm not trading in this way. I'm not putting my stop losses and stuff and entries based on some channel. No, but I'm just pointing out what the obvious trading pattern is, and we are nearing the what do you call the support side. All right, and we are in a downtrend currently. All right, and that's all I'm pointing out. I'm saying there's probably a good chance that once we get around 96.5, we're probably going to see the market. Maybe there's a good chance that we see the market put in some support, build support here for another move up. We'll see. We'll see. If we go to the weekly, you can see how strong that weekly candle closed below the low of the previous weeks. All right, you can see the line here, and I highlighted those in my last video, saying that this was going to be a draw on liquidity, and it was. Now, if the week closes this way, am I expecting more bearishness to come? Yes, because we didn't just wick down like this one wicked this low. All right, it wicked this low because it wasn't finished with business up higher, so to speak. All right, if it trades through that low and runs the low and closes below it, then there's an intent for price to go further. That's what happened here. So if we go to the daily, what we can see is in that bearish weekly candle, there is structure inside of it on the lower time frames that could support lower prices. All right. Like I just said, we hit these lines for liquidity. Boom. That's great. We knocked them out. All right. Now, what do we have? Let's get this line straight. What we have here is a low being taken, intersecting an area, a bearish fair value gap. I like this as an area to watch for price to pull back to and then find resistance so that it can move even further down. I'm looking for more bearishness to follow this impulsive move. Now we may get a correction to the fair value gap and price could find its way down from there. Does that make sense? Short-term bullishness and then a move down because this is an impulsive move. So it took out an external range liquidity here at these lows. I'm looking for an internal move for internal range liquidity and a fair value gap so that we can start another bullish leg down. That's it. You like that breakdown? Good. Let's move on. All right, euro is the exact opposite of the US dollar index. All right, and I want to show you what I mean. We got a channel down, a descending channel down, and we are at the resistance side. All right, quite possibly we could be seeing a price pullback before it breaks through this descending channel. Okay, let's go to the weekly and we can see we had a strong close, right? We had a strong close last week above the previous week's highs. All right, this is the external liquidity being taken here. I'm looking for an internal move. That internal move will probably come in here. We do not have any bullish fair value gaps in here, but what we have is these descending lows and a move higher. All right, I like this as an area of fair value. All right, and when I see those areas of fair value, I like to see price come back and test them before going higher. But we could find that internal area here inside of that candle on the lower time frame. So if we go down to the lower time frames, we can see that there is some bullish fair value gaps here and here that can support higher prices. If price comes down, we could see it finding support and just finding its footing there for higher prices. We can also see it happening on the slower one as well. All right, there's two of them here. All right, two bullish fair value gaps right there. If we go down to the 4 hour, we can see that price is in a consolidation. I love to see this. All right, because what I'm looking for is a sweep of the range highs, a sweep of the range lows before it goes in its intended direction. All right, we've swept these highs already. Boom, we've come down. Can we see price come down even further, sweeping these lows, the sell side liquidity into the daily fair value gap here or the lower one here? Yes, we could. And that will help me to take a higher probability trade to the upside. All I got to see is price start to find its footing and then look for the signature of price that allows me to think, hey, price is about to break up higher, right? If we go to the pound is not too much different, not too much difference. If we go down to the weekly, we can see strong candle close above the previous highs. All right, very strong. I'm looking for more bullishness to come, but maybe we get that pullback. All right, maybe we get that pullback before it heads to that higher swing high here. All right, we've taken out liquidity here at this external range liquidity here. All right, we come back into an internal range liquidity point here, this fair value gap. We have a 2 candle reaction there, rejection, pops up higher. I'm looking for price to maybe pull back, a shallow pullback to continue to take out that swing high. If we look at the daily, maybe we see, yes, we do, bullish fair value gap here and another one here. All right, we can see a pullback to these fair value gaps and look for a price to give us a signature that says, yeah, we found our footing and we're going to go higher. Bearishness, short-term bearishness before longer-term bullishness. I think the draw on liquidity is the buy-side liquidity. All right, now if we go to the Aussie dollar and New Zealand dollar are a little different. All right, now watch. You can see that there was this high up here, right? And we have this as a draw to bring price up to mitigate that big old order block up here, which is nothing but an area of fair value. All right, and price is grinding its way up. All right, we have this one right here, this high right here that could draw price up higher into this higher time frame area of supply. We have the this weekly fair value gap that has not been touched yet. All right, I can see price swinging down before it goes up higher here. We're going to find out. All right, we're going to find out. We have price did reach this high last week. All right, as I had put in the previous market, what do you call it? The Forex forecast, the last one, we did reach that, and that as a target. This should be the next target before we can see the sweep of this sell side liquidity into this weekly fair value gap. I'm looking for this to happen. That's what I'm looking for. All right. This, I think, is going to be a high probability trade to the upside. We came close. Price pushed up, and I want you to recognize that we did not close above that previous weekly high. We closed back within it. There is a good chance that we may see a pullback. Now, if we go down to the weekly, is there something, like I always ask, is there something in this candle that will support higher or lower prices? We have a bullish fair value gap here. And price could definitely come down here, find its footing before going higher, for sure. But if price comes down here and it takes out, disrespects that that bullish fair value gap, I'm looking for price to pull past it, pull back up to it, and then come down into the weekly fair value gap that is untouched, down to these lows. You understand? Down to take out this sell side liquidity. But we got to watch. We got to be patient here. Patience. If we find the footing here, then we're going to go up top. All right, we'll see. We'll see what happens when we reach that POI. New Zealand dollar has a similar situation. Same situation. We have a bullish fair value gap here. The price could come down here to that bullish fair value gap to test it. And if it finds its footing, then we'll go up. What do I mean by when it finds its footing? Look at this fair value gap here. All right, look at it. Let me get a permanent one. I just fooled myself. All right, let's look at that. All right, this is call this a fair value gap. Okay, what I'm looking for is price to come down. Trade down into it, lower low, and a higher high. That is when it breaks these highs. I'm looking for price to come back, and that's going to be a high probability trade to the upside. That is the signature that I'm looking for. That signature right there. Got it? Boom. Let's go down to the Canadian dollar. If we go to the Canadian dollar and we look on the weekly, we can see that it's not as strong as the others, right? Why? Well, look at this. Stop. All right. What we see here is last week's close. It went up and closed well below the low of the previous weekly candles. Why? Look at this. We are in a monthly fair value gap, a monthly bearish fair value gap. I've been talking about it for weeks. I said, I had this drawing when it was down here. I said, we're going to reach up into that, and I'm going to look for price to turn around. I'm looking for the signature of price. That'll tell me that price is coming back down, probably to test this monthly fair value gap here. All right, it's untouched. All right, if we go to the weekly, you can see how we close well below that candle there. All right, we tried to go bullish, and then it came back down. I'm looking for some consolidation here. All right, looking for some consolidation here, but this is a monthly fair value gap. Will it be a speed bump? Because it's been some time ago. That was back in November 2023, if I'm not mistaken, right? 2024. I'm sorry, 2024. All right. We hit that speed bump. We have 2 candle rejection. Are we going to see more follow through? I don't know. We're going to find out. Oil is connected to the Canadian dollar, so we may see price start to go down. We might see some consolidation here. This is something that bears watching. All right, because we are in a higher time frame bearish fair value gap. We'll see if it's going to come down or not. I'm thinking it will, but I want to look for a signature on price. Let's look at the daily. There is a bearish fair value gap that we had a 2 candle rejection to. All right. I'm looking for this wick. I'm looking for this wick because you usually see these wicks get filled. I'm looking for price to come on down. I'm looking for price to come on down at least to this swing low. Let's keep watching. Let's keep watching because that is an interesting situation. We took out a bearish fair value gap here on the daily, right, to come up, but we respected this daily fair value gap, this bearish one down here. So and we price pushed it all the way down. I'm looking for that. Looking for some follow through on that. If we go to the Swiss franc, let's go to the weekly. All right, you can see strong close. It's been strong. That's an impulsive move. We have a correction to the move. This is an internal. This is external. We took that high out externally. We could come back in for the internal move. All right, internal liquidity. We took that and then back up to external. We're probably heading up as a draw on liquidity. I think this high is the next draw on liquidity. I like it. I like it a lot. All right. And do we have something in this strong close on this bullish candle? Do we have something inside that says we have support for higher prices? Yes, we do. All right. If we go to this bullish fair value gap here, and there's another one right there, another bullish fair value gap on the daily. Help. Okay. And price could use that to find its footing to go to high prices, which I think is the intent. This is the area. There's down close candles and there's stronger buys up. This is the area of fair value. Price could find its way down here to support higher prices for sure. This might be the height of it right here. So I'm looking at this one first. I'm looking at that one first. If we find our footing there, then I'll be happy to take a buy from there. But we need the signature on price. This is a higher probability one because it gives it's in the discount of this range. All right, we got a good pullback there. That would be a higher probability one, but I'm looking at this one first. Okay, if we go to the Japanese yen, the last one, it's been an interesting currency. Look at the way it closed last week. All right, price has been kind of moving down, lower high. Did we make the lower low? Yes, we did. We did take out we made a technical lower low. All right, but we did not take out the high of this range. What we're doing is consolidating, and we have a range of price here. All right, I'm looking for a bottom sweep before a move to take out these descending highs here. That is a strong draw on liquidity, and I'm looking for price to move in that direction. We took that low. This could allow price to go higher. Do we have anything in that candle on the weekly that says, yeah, we're going higher? No. All right. What we do have is this inverted fair value gap here. I kind of like this. I pointed it out to my peoples over here. All right. You see that there was a bearish fair value gap here. It was overtaken by this bullish fair value, bullish candle, and it tapped back into it and continued higher. This is an inversion. All right. So do I expect higher prices? I do. So We have to wait and see. We just have to wait and see. Thank you for watching my video. I'll see you in the next